Welcome to the Applied Blockchain podcast, where blockchain technology and innovation are in the spotlight. My name is Ben-Ari, and I'm the founder and CEO of Applied Blockchain, and I'll be your host as we dive into relaxed conversations with industry experts and thought leaders to get their views on what they're building, the Web3 ecosystem and its transformative impact on the modern world. So Bernhard, tell us a little bit about yourself, your role, I guess what you're doing at the moment. Yeah, just for the listeners to learn a bit more about you.
Right, yeah, I'm Bernhard. I'm working at SAP in Germany, and I'm leading a team called the SAP Digital Currency Hub. And actually what we do is really we enable customers, we enable enterprises to make payments and to receive payments in digital currencies, and we are very much focused on stablecoin payments. It's probably interesting to see how we came to the conclusion that this is a real relevant topic for enterprises, because not many enterprises today use stablecoins or, in broader terms, blockchain-based payment systems. Now, actually, it started about 3 years ago when a customer in Australia reached out to us and asked whether SAP can support them taking Ether as a means of payment from their clients. It was actually a gaming company, and they said, we want to get paid in Ether, and we also want to grant prizes in Ether. And they were creating a virtual horse race. You could purchase a horse, you could race the horse, and then you could win a prize. And they said, it must be quite simple. Why don't you just add another currency code to the ERP system, and then you are done? And then we said, stop, it's not so easy. You need to account for it appropriately. That's one. First, all those digital currencies don't have just up to 6 digits. They have much, much more. I think Ether is at 18 digits. And a classical ERP system typically handles 6 digits and basically takes a currency as a currency. It doesn't kind of evaluate the currencies. So we were quite excited to validate with other customers, is payments in cryptocurrencies interesting for you? And most customers immediately said, stay away. That's too risky. I don't like the fluctuation.
That's not hugely surprising. Okay.
Not really, but what they really did like is they did like the fact that you have instant payments, that you have rather cheap payments cross-border, and that you do not need to mind banking hours. So 24/7, near instant payments at low fees. So this did resonate quite well with them. And this is why we said, well, there is such a breed of token, of crypto asset, of digital asset, and this is a stable coin. A well-done fiat-backed stable coin, such as USDC, EuroC, and the likes, I think is ideally suited as a means of B2B payment. And this basically brought us then to develop a solution that enables exactly that kind of new payments, instant, cheap, always on a global scale. And this is what we are bringing to market pretty soon, and what we are currently testing with a good handful of customers.
Okay. Amazing. Very, very interesting. I'm personally very interested in this as well because we've been doing a lot of work with enterprises over the years. I don't know if you're familiar with this, but when we first started back in 2016, we went through the Barclays Techstars program with an invoicing solution that was called TallySticks at the time. It was invoicing and invoice financing. And we actually did a proof of concept with SAP because we worked with Barclays, who are a big user, a big customer. And yeah, we actually set something up in the SAP cloud. This is back in 2016. So we didn't even have stablecoin payments then.
Yep, right? Quite a while back.
That's a while back, and of course it was very early for everybody. So I think it kind of stayed where it was for a while. But it's really interesting to see that this has kind of been revived in a form that's updated for the current stablecoin environments. I'll kind of tell you my view of how I understand this works, right? And maybe fill in or feel free to correct me. So my understanding is that most companies in the world, certainly most large enterprises, will use SAP for its ERP, or one of the competitors who we won't talk about. Within that, the ERP system has a number of modules. One of them is financials, and that's where the company, the CFO, the company's treasury team will be managing payments, right? And so I think, roughly speaking, at the end of each month, there'll be a payment run when files will be produced by the ERP system as a result of all the entries for all the people that need to be paid. And that usually goes to a bank where it's uploaded and the payments are actually executed, right? that's my kind of rough idea of how payments work in enterprises today, right?
Yeah, and I think this is a very good rough idea. Just to go a little bit deeper, dig a little bit deeper. So typically it's not only employee payments, it's of course also supplier payments, which is the bulk of the payments. And
Yes.
typically you do those payment runs on a daily or 3 times a week basis. So you have quite frequent payments. What that means is, let's dive a little bit into how the world is changing with stablecoins in a non-disruptive fashion. I think this is important for our listeners, that it doesn't change the way you do business. It just changes the way you move money. Now, as an accountant, you typically get an invoice. You need to account for the invoice. You need to book it into your core ERP system. So this is the normal process. And this is something that we do since ages as our core finance module. What you can do with stablecoins, you just change one simple attribute of the invoice, which we call the payment method. So we basically instruct the system, don't pay that invoice via traditional banking rails, but instead use a stablecoin, use a digital currency. And you can set that up in such a way that for one business partner, for one supplier, you're always paying a stablecoin, or that you just pay select invoices. So it's basically very much the same process from the accounting perspective. And yes, indeed, then you have the payment run that captures all the invoices that go via the same payment method. And the digital currency that we are currently building is then the bridge between the enterprise world. So we basically get that payment file and make sure that it's executed as a blockchain transaction. So we are, in a very simple terms, building the bridge between the core ERP, the core finance system, and the blockchain world on the other end. And then, of course, we also monitor the blockchain for incoming payments, monitor the transactions that have been executed, and feed that data back to the core ERP system. And we do that in the very same fashion as a bank would do. We create a very traditional account statement. And this is a document type that any finance system can well process. And we use the very same formats. And we work under the assumption, and this is true under IFRS, that a stablecoin is a cash equivalent. So it always accounts for one-to-one.
Okay, that's interesting. What happens? Like, what's the magic behind the scenes? So I've described roughly what happens when, if I'm doing a regular payment through a bank, there's going to be a file that gets uploaded to the bank with the payment destination and the account details and the amounts and so on. What happens if it's a stablecoin payment?
Yep. Let's dive very, very deep into that particular part of the process. So basically what we know from the core ERP system is who needs to get paid, what is the amount that needs to get paid, and for which business purpose the payment needs to be, which is basically something like an invoice number to later on reconcile the payment. Now what we do is we take that data points from the ERP system, we have stored on the business partner level the wallet address to which the amount should go, which is of course the equivalent to the IBAN, to the bank account number. And we either create a blockchain transaction with that data point, so amount, token to be settled, which you have agreed upon with your business partner, whether you take USDC or USDT or whatever token, plus the network on which you're going to settle. We then create the blockchain transaction and send that, and of course, to the blockchain node for validation. So that's one stream. And however, when we talk to our customers, most customers don't want to manage the wallets themselves. They would want to rely on a custodian. And I mean, we all know there are big custodians out. And this is also a case we support. Rather than create the blockchain transaction on a customer managed wallet, we basically instruct a withdrawal on the custodian. And then basically have the custodian execute either the transaction straight on the blockchain, or in case both parties sit with the same custodian, do the kind of typically they use omnibus wallet structures to do the kind of book-to-book transaction on their side.
Yeah. Okay. And are you able to share which platforms you're integrated with, or which stable coins? Are these things public yet? Are you able to talk about these things?
Well, absolutely. I mean, today we work with USDC and PYUSD as part of our standard delivery, but technically we are capable of supporting any ERC20 token. And whenever a customer comes and says, hey, I want to use ERC20 token ABC, then we just simply add it to the platform in a matter of minutes. So basically any ERC20 compatible stablecoin is something we can support. I think this is the good news. And we can support any network that the custodian then supports subsequently. And if you run in self-custody, we are very much focused on Ethereum and Polygon. So any ERC20 token, if you run in self-custody with our own stack, Polygon, Ethereum are the networks of choice. And if you run with your custodian, of course, it depends on the custodian, on the network state support.
Yeah. Okay. Okay. Amazing. So Bernhard, I mean, for me at least, that's very clear now how that's set up and how that works. So that's the what. Then I guess there's the question of the why.
This is very much a business question, right? So why, as a business, should I care about stablecoins and all the new crazy stuff that is coming out from the techies? And I think it's quite simple. First case for me is cross-border payments. And I guess many enterprises also in the startup space look at cross-border payments. And why is this so relevant? Cross-border payments today are quite expensive. A typical payment starts off at least $20 on a per transaction basis. That's quite much money. Now, on the blockchain world, if you go on a cheap blockchain such as Polygon, you're in the range of cents. And why does that matter to enterprises? If I make 100 million payment, the $20 probably don't really matter. I mean, that's kind of noise. Now, what we see is, especially with smaller enterprises, that they want to also move to new business models, such as subscription business models. So your invoice amounts get lower and lower, even in a B2B setting. Now, if you're having a $500, $1,000 invoice and you pay $20 just for the money movement, that is really much money. And this is why that entire notion of cost in cross-border payments is a critical one for many enterprises, and it's getting exacerbated because you get to smaller invoice amounts. Mm-hmm. So cost is one. The second is speed. So customers did report to us that typically a cross-border payment takes between 2-3 days up to 7 days. And within those 7 days, you basically lose interest on the payment, right? The money is stuck somewhere in the banking network. And why is that the case? Because the bank in the originating country typically doesn't have a one-to-one relationship with the bank in the receiving country. So you have banks in between, kind of a network of so-called correspondent banks. So the money basically moves from one bank to another bank to another bank to another bank. And all the banks in between need to take due diligence. So AML checks, KYC checks, etc., etc. And that takes time and that costs money. And this basically drives that inefficiency in cross-border payments. Now, in the blockchain world, it's quite simple. The sender has a wallet, the recipient has a wallet, the transaction gets validated in between, and it takes minutes, if not seconds, until the transaction is considered being final without any intermediaries on the way in between. So it's about costs, it's about speed, and it's about transparency. Transparency is important because in those 7 days, you do not know where the money stands, right? The sender claims they have sent it, you haven't received it. And unless you are a very, very large organization that has access to the SWIFT network, you do not see the messages that the banks do exchange. So if you're a mid-sized enterprise, you're basically flying blind for 7 days. We also had cases where NGOs distributing aid money, they also want to have really kind of that traceability on where the money did flow. So from them, which entity. And all the transparency is given via blockchain. So it's about cost, it's about speed, it's about transparency. And just to add a last use case in, and it's about availability. So if you really want to close, let's say, a merchant acquisition transaction, that is a large transaction. You probably don't care about the $20 that you can save. But if you do close the transaction on a Saturday, the counterparty really needs to see the money coming in. And that's barely possible in the traditional banking system. Blockchain is always on 24/7, 365 days a year. So you basically can move money instantaneously from one party to another party. And this for me is the kind of base layer. And we can also jump into more sophisticated use cases that we see emerging as time progresses.
Yeah. Okay. Makes a lot of sense. I mean, I can tell you for us as a small business, at one point we were receiving half of our revenue in USDC and stablecoins from US companies. And before they'd pay me, and before the email arrived saying that they've paid, I can already see the balance.
Yep.
So,
it's the beauty of it.
it's
and now comes the challenge, because you have stablecoins sitting there, you have your finance system. I mean, if you get one payment, it's easy, you manually reconcile it. But large enterprises getting thousands of payments a day, I mean, they cannot manually look into the wallets and see, okay, there's money coming in it's very hard to understand from whom it's coming because you just see the sending wallet. You don't want to kind of take down email and match the two wallet addresses together and then do the bookkeeping. And exactly this is what we facilitate. We basically automate that process. We listen to the wallet. We know the open receivables. We close the open items and basically tell the ERP system which payments have been made and can feed that back to the customer.
Bernhard, how do you solve the chicken and egg problem here? Which is that you need both sides to be wanting to do this and support it, right?
I mean, it's a difficult one, right? I mean, you need to build up a network. And of course, first and foremost, it's nothing we as a tech provider can solve. It's basically
Yeah.
our customers on the one hand really kind of pushing their suppliers and accepting stable coins. Now, that is the one answer. It's probably the simple answer, but that doesn't allow you to scale. Now, what we are doing is we are also, of course, are engaged with financial services providers. So is there an opportunity that working with a traditional institution enables you to accept the stable coin, but have that kind of indivisibility of fiat currency so that you do not need to take care of wallets and all the kind of stuff yourself, but that you basically, that your customer sends you the stable coin, but you receive fiat. So basically having still financial services providers in between. And I think in the short term, I think this is the way to go. I don't see that financial services will go away from today to tomorrow. And I think they probably will stay for years to come.
Mhm.
Although many people preach that basically the blockchain is democratizing money movement, so you wouldn't need any financial services provider. You can do peer-to-peer payments. Probably that wouldn't pay, at least not in the enterprise world in the next couple of years.
I concur. I don't. I just think the roles changed. It's like the blockbuster Netflix. It's not that we still need a way to distribute. The media still needs to be distributed by someone. It's just that the technology and the platforms have changed, and the roles have therefore changed. So I think when you talked about custody, when you talked about enforcing the regulation or implementing the regulatory requirements and so on, right? These are all things that won't go away. Regulation will probably will likely change and become more enabling for the technology. I think to take into account what's possible with the technology, but I don't think it goes away. So I think the roles change.
Yeah. No, absolutely. I think it's still continuing to change. So I think the roles of financial services of banks will get amended, so they will have more options, more services that they can provide to their customers. That for me is one. And we also see that regulation, while some people do not like regulation, I believe it's really, really key in the enterprise world because all the customers we talk to tell us if there are real regulatory guardrails, we feel comfortable doing business with a certain stablecoin or on the blockchain. In Europe, we have MiCA, the market in crypto assets regulation. I think this is really, in general, a good thing because it gives us the guardrails, it gives us the trust that this is something real serious. And we see with the new US administration that this is also happening in the US, which is also very positive. So then two big economic areas will have hopefully soon solid stablecoin regulations so that you really can do business with stablecoins in the US, in Europe, between the US and Europe. And I think this is a good thing.
Presumably, you're having conversations with some of the larger companies. I mean, take me through your experience, really. But I assume that you put this out there. There might be some curiosity, like you said. There's probably a lot of companies that certainly treasury teams that are not familiar with this and would probably be, wouldn't might not want to go near it initially, right? Their instinct might be, I don't need this, or I don't, this isn't something that I understand or I need to necessarily engage with. So what do those conversations look like, and how far do you think we are from, I think of some of the large enterprises that we work with. When will the day come when I'll be able to, we already have a blockchain address and Ethereum address in our invoices, but when when will the day come when a large enterprise will use it?
I mean, probably sooner than later, right? I mean, let's just take one of our customers that I can quote in public. That's PayPal, which I think we would all agree it's a large enterprise. And PayPal is basically doing through our tech stack payments in PYUSD, their own US dollar denominated stablecoin, and we did publicly announce transactions between PayPal paying their service provider Ernst & Young through our tech stack. So large enterprises are starting, but it's probably not yet mainstream. But we will see that growing. And I think you ask, what do corporate treasuries think about it? I believe it requires lots of education. So people first need to understand what is a stable coin, or in broader terms, what are the different forms of digital currencies. So ranging from central bank digital currencies, where the European Union, the European Central Bank is kind of experimenting with, then commercial bank money tokens that are out, and stable coins. And people need to first understand what are the different instruments, for which purpose can I use which instrument. And of course, it's our ambition as SAP to really support all kind of instruments, be it very traditional bank payments, which are still 99 point whatever percent, whether it's central bank digital currencies, whether it's commercial bank money tokens, or whether it's basically a stable coin. And basically from a technical perspective, we distinguish whether it runs more through a banking network, meaning being addressed via a bank account number. And many banks that work on commercial bank money tokens basically hide everything behind their kind of normal APIs, the normal seen basically behind bank account numbers, or whether it's kind of more in the form of a wallet where they really speak the blockchain or expose the blockchain world to your counterparty. And we have solutions for both. We have what we call multi-bank connectivity, more for the bank account number address space, I would call that. And for the wallet address space, we have the Digital Currency Hub. So we have the full continuity. And coming back to my statement of non-disruptive processes, the core document is always the invoice, and you just select the kind of payment rail. Is it kind of normal process, or is it a digital currency process, meaning a wallet process? And then we can really make sure that it's running through the right way.
Bernhard, one of the things I sort of come across in the conversations is that there's a small number of companies now whose treasuries are interested in crypto assets, right, or digital assets. And there are also companies, more and more companies putting together real-world asset solutions. And some people I speak to, they describe like one of the scenarios would be a treasury that holds some of these real-world asset tokens. They could be treasury bills or other financial instruments, which through tokenization they could very easily move in and out of in terms of their treasury, and so they would have maybe more speed and flexibility. From the blockchain technology, and then we also have efficiencies through mechanisms like DeFi type mechanisms and so on, right? So there is another angle on this, which is there's the processing of payments as you described, but there's also the treasuries potentially in the future wanting to hold funds in this way, because then they have a different way to manage them as well, which might be more efficient. This is all a little bit like this is maybe even further out. But this is something that we've already seen. We're already seeing some movement around. I'd say. Is this something that you've come across, or it's maybe a little bit?
So we hear about that. We watch that space, of course, very intensively. And I think you're right. This is probably a little bit further out. Or let's probably sketch the 10-year, 15 years perspective.
Yeah. Okay.
The question is, will enterprises run on the blockchain? And this is a provocative thought, right? So why would I dig deeply into the traditional system if I have all my kind of financial assets, tokenized bonds, treasury bills, money market fund, everything on chain? If I use a stable coins rather than a bank account as means of not only moving money, but also driving investments. So then I'm basically in a real-time banking world, financial world. And I find that fascinating, that thought. So basically being able to have an instant trading and settlement platform, and we are talking to enterprises, just establishing those platforms, licensed providers of a new breed of basically getting into those real world assets. I think this is also new. So the infrastructure is slowly but surely building up, and I find it very fascinating for a treasurer. And if you look under European law, under MiCA, stablecoins are non-interest bearing. So for me as a treasurer, why should I stick to a stablecoin? Doesn't make sense for me. Now, coming to what you just said, if I have real world assets on chain, and I can very easily and a very low price now purchase and sell that assets with an instant settlement, I mean, it's fascinating, right? I get the stable coin, I purchase a money market fund, keep that overnight, need to pay my bill, move that out. And we can basically facilitate that in a fully automated fashion. So you basically specify a kind of your investment profile, want to have money market funds or probably a little bit more uh, higher yield bearing instruments with probably a different risk profile. So you can also then bring AI into the mix and basically kind of have that kind of rebalancing of your portfolio in a way. So you can basically very seamlessly differentiate it between the store of value, which is probably more the real world assets, tokenized money market funds, etc., and the means of exchange. So these kind of two properties of money, so store of value and means of exchange, and have them easily being interchangeable on the blockchain. I think this is a fascinating perspective. Probably we believe it's further down the road. I would probably guess 10, 15 years, but hopefully I'm wrong and it's coming sooner.
Well, I'll second that. Let's get a few invoices paid first, then we'll.
Yep, you need to start somewhere. And I think all comes back again to the educational piece, to that mind shift. So treasurers typically are very risk averse and conservative. So you really need to show them the benefits of the technology. And you also need to have that proof points that it's not really riskier than any other payment. And in fact, I find it interesting if I go to conferences and you have the stablecoin camp and you have the commercial bank money camp, token camp, and both argue what is the kind of safer form of money. Then the one camp says banks have been there since ages, so we just tokenize our deposits. So nothing changes. Rest assured, we are the good guys. And say tokenized stable coins are kind of a bad thing. Now, the people from the stablecoin world say, hey, we basically hedge our bets. So we have a certain amount of cash holdings, 20, 30% with different banks. We have treasury bills and the likes behind it. So it's a bit more of a diverse portfolio. And then it's really hard to judge what is the better way. I mean, we saw big banks going bust, like Lehman 15 years ago, roughly. So I think it's not entirely clear what is the kind of best form of money moving forward. And I guess treasurers now need to get confidence that those new forms of money, be that CBMTs, commercial bank money tokens, be that stable coins, are a good thing. They need to get the trust, the confidence into those tokenized money market funds. We see big banks issuing them, which I think is the trust factor. People need to get the trust into the infrastructure, into the providers, which I think is certainly slowly but surely builds up. And then we need to create use cases that big companies with big brand names step in and say, yes, this works. And I think then we can drive the ecosystem up for the benefit of everyone playing there.
Yeah, very good, very good. I mean, I think ultimately people will vote with their feet. Treasurers will vote with their feet. So they're ultimately the users of this. And so they will look at the different products out there and see what they're most comfortable with. And then that's presumably how this goes. But let's see. Bernhard, I didn't ask you, how did you get into this in the first place? Like, was your background within SAP, or were you working in blockchain or digital assets previously?
Actually, I'm a long-time SAP guy. I'm with SAP since 30 years, started in the mid-90s as a programmer, all through the company, was in research, and most lately, before we started that project, I was in the mid-market. And this is where we saw that customer demand for cheap, fast, transparent cross-border payments. And then we basically decided to move into that market. And then we basically put together a team of experts kind of driving that initiative.
Yeah. Very good. It must be like opening up a whole, like, diving into this ecosystem and kind of trying to unpack it I guess, in a relatively short period.
That's a fascinating world behind.
Yeah, very good. Bernard, before we go, just a quick, I usually ask our guests if they have any resource book that they've read or something they listen to or something that they might recommend to other listeners. Is there anything that springs to mind?
I mean, I personally like innovation.
Innovation.
So, Innovator's Dilemma, Clayton Christensen, I think is one of my favorite books. And everyone knows that. Like also From Zero to One from Peter Thiel, where he basically states you need to be successful in a small market. Basically, market dominance in a small category is more important than being a nobody in all kind of markets. So those kind of books are the ones I really like, kind of all that deal with innovation, or also Crossing the Chasm, which I think is also a classical reading. And I also like some books about the psychology. There was one guy that basically describes how to really kind of how people think about it. And his argument is you have two sides, a rational and one emotional side. And typically the emotional side is the quick one, and that basically doesn't let you think deeply about it. So people are somehow biased in the way they make decisions. I also find that fascinating. So it's
Wow,
all about kind of innovation.
thinking fast
Exactly.
and slow or something.
Yep.
Yeah, very good, very good, very good.
So those are the kind of things I love reading. And I think they always kind of give me inspiration to do things probably also differently than a large enterprise would typically do it.
Okay, Bernhard, thank you very much. That was super interesting. It's great to see that this is available now. I hope companies start using it. We'll certainly, the companies we talk to, we're certainly going to prod them to let them know that this is now something that's out there and they can use. So yeah, thank you very much for your time. And as for many of our guests, I hope we can do another one in 1 or 2 or 3 years and see where things are.
Absolutely. And we gave also some bold projections that the world moves towards digital assets, real world assets, and stable coins. Let's see where we stand in 2 years. Hopefully, we see much progress. We really see enterprises moving in at scale and probably see even more interesting use cases. I think we didn't touch on things of programmability, which is even also further down the road. So I'm super excited staying in touch with you. Thanks for having me. It was a great pleasure and honor being with you on the podcast today.
Yeah, very good. Thank you very much, Bernhard. Thank you.
Thanks.